Hello, my name is Raitis and welcome back to another evening commentary here on Farewell Total Return Investing. And in today's evening commentary, as usual, we're going to take a look at the markets. It's Tuesday. We have the day before the CPI news release tomorrow on Wednesday, which is the news event which is everybody's waiting for this week. Now, let's start off as usual with dollar, and then we will get into the details on the equity futures. You can see dollar sold off today for another run into the monthly fair value gap high and a weekly low, which we have cleared out right now. This is a long-term target, and again, the protocol for our long-term targets is that market can distribute. This means it can retrace. We could see consolidation, continuation of the downside, or a retracement or reversal. So anything can happen, and our best bet is to just wait for displacement and more market information, which will come out with the CPI news release tomorrow. And with that said, we don't want to trade before the CPI news release, that's for sure. And just wait for the right opportunities. We have still Thursday and Friday after that, so no worries and no hurry to take a trade. Because we also have traded below a long-term objective, we also could see market disparity. And now let's see what T-note futures did. And voila, T-note futures have been bearish today, while DXY has been bearish as well. This means we have asset disparity. We saw a run lower on T-note futures at 14 o'clock. Okay, DXY consolidated, but the T-note futures really sold off. You can see we are rejecting the rejection block, and here as well, and here we traded above the high. Basically, we also have SMT divergence, but that's really not so relevant. We just studied the candle closures. I talked about this in the trade analysis from today's trade. On the equity futures, I took a trade. I messed up the analysis a little bit. I gave you out these scenarios, and I still took a loss because I misinterpreted DXY as it was running higher right here on this run right here at 10 a.m. with the high impact news release. But we're gonna get into the trade later. So again, I really have no bias for tomorrow. I don't know what the market wants to do. Let's see if dollar is bullish, bearish. Gold should be bullish, and voila, we are seeing that. At least normal market symmetry. You could have taken the long as a London close, a retracement setup, 15-minute order block, buy a limit order, and then the problem is we didn't see any real major displacement because T-note futures have been massively bearish again, as we said, and that's why gold, of course, has been held inside a consolidation, even if DXY was plummeting lower. Again, difficult market conditions because we're trading at long-term objectives, and there is a lot of rebalancing going on. In the hedge funds, they're restructuring their portfolios because currency futures have been massively bullish, foreign currencies have been massively bullish, and yeah, now you have to restructure your portfolio so everything is weighed out correctly, which brings us into, of course, let's check on Euro USD, traded up above this high as well. GBP USD is a little bit weaker due to the strength on the Euro GBP. Let's see if we can sell off from this bearish daily order block, because I think this run is still a run on buy side, excuse me, to then sell off again. We're trading above the rejection block, so let's see what we get. Going to the CPI news release tomorrow with equity futures. Yes, I must say I took a long on NQ right here, and yeah, you can see I got stopped out. and then I took another trade but got stopped out break even. And I must say I violated the protocol. And I'm gonna teach you this protocol today. Sadly, I had to make the mistake today myself before I could teach you that. Would have been nice if I would have followed my plan myself, but that's trading. You sometimes do things that are stupid. Okay, let's be fair. Everyone had this, and that's normal. But we're gonna work on it. I'm actually creating a flowchart. I hope you can see this flowchart for my trading. I'm currently working on that. I started it today, and I hope I can do like a really nice mind map. And yeah, flowchart basically what I do and how I approach the charts, so I can maybe hopefully sometimes kind of automate this system inside my brain, because I don't think my trading approach can be translated into a trading expert advisor bot, whatever you want to call it. But again, you can see the protocol for me, especially on a day before CPI or before FOMC or before NFP, the day before, really watch out for seek and destroy profiles starting at London session. And what you could see here is we are running out sell side, we are running out buy side, and always seeing a mean reversion to the equilibrium. And now 930, wick below the low, wick above the high, traded back above the range. No sustained runs, and this went on for literally the whole day. And we're seeing that with the fact that we have asset disparity. If I overlay NQ, now let's pull it up. NQ and YM. Now let's make this lines. Okay, wait, so ES up here, or like this. This is NQ and YM down here. I scrunched them up a little bit, but basically, if we just look at the 930 opening, you can see, so down here is Dow. Dow has been selling off since the start of the opening bell, while DXY has been a little bit, wait, let me maybe still turn on the candles. Maybe it should be fine. You can see NASDAQ was pretty bullish, while ES only saw a run back into this bearish order block. This would have been a very, very nice short on ES below this 1 hour drawn liquidity. But basically, NQ was strong, traded above the high, like ES was something in between, and YM just was purely weak from the start of the opening bell. Now this is a simple asset disparity, and I saw that live playing out on the charts, and I still went in on and traded, coupled with the fact that we have the seek and destroy profile, which I also ignored. I don't know. I have to do the mistakes myself to really, learn from them. I have my new trading model for this year, so I have to go through the mistakes myself to then hopefully learn and not make this mistake again. The thing is, if I do one mistake one time, it's fine. If I do a mistake 2 times, that's a real warning sign, and I hope we will never get there. And I think we didn't do that yet, but I still have to really embody my trading model to the fullest, because right now that's not the case. I can't execute flawlessly with this new trading model, but we're working on that. As I already said, in yesterday's kind of more psychological video, that you have to align your inner reality with your outer reality. And currently, my outer reality doesn't represent my inner reality that I envision myself doing. So yeah, we have to work on that. But again, so the protocol is pre FOMC, NFP, or CPI days. Really watch out for seek and destroy profiles during London session. And if we see a seek and destroy profile during London session on a day before FOMC, CPI, or NFP, then don't trade, okay? Because you're gonna get nasty criterias like this, coupled with the fact that we have asset decoupled markets between the equity triad, and we have, I think we also, yeah, so we have a down close candle on T-note futures, and we have at least a bullish candle on NQ. We can just do the quick comparison. 10-year T-note futures, they should be symmetrical. So 930 is here. You can see Nasdaq was rallying higher, T-note futures were trading lower. Then as T-note futures were trading higher, NQ was trading lower, and this is a complete mess. I mean, overall, right now we're seeing some major disparity between these two asset classes, even if they usually, when market things are normal, market conditions are normal, they should trade in sync. But right now, because we are at historical price levels and we saw a lot of expansion and we are at long-term objectives, we will see this conditions where we get distribution, and this results in a lack of symmetry in the marketplace. So with that said, and you can see we had decoupled markets, like literally exact opposite. But yeah, let me quickly as you can see, I'm just looking for like maybe news event. I mean, we have all the Trump speeches going on as well recently. Where did this chart go? Okay. You can see they're really not moving in sync. Okay, here they were moving in sync again. Rally lower, and then they caught up together. This was Wednesday. Oh, okay, we're in February. You can see at major economic news releases, they usually trade the same direction, okay? This is how you can kind of determine. Here not, okay, but I mean, we were bullish on T1 futures, but then we flipped. This was an NFP Friday from February, and yeah, Nasdaq just saw a doji candle, but at the end we sold off on equity futures as well. But I don't want to make this video too long. It's already 30 minutes. I covered the essential topic I wanted to talk about, which was the protocol before CPI and days. Again, the trade was just this 5 minutes. For value gap, we got stopped out there. Then we took another long from the 1 hour fair value gap stops. We're below the 15-minute fair value gap low. You can see the market initially rallied higher, and then as we were trading at this bearish order block, I put stops break even, and then market stopped us out somewhere right here at 10.25, somewhere around that. So overall, I shouldn't have traded today at all, but we're learning from our mistakes, and I'm going to journal that and pick it up and emphasize this in my trading model. the most important thing, which I really want to emphasize, if you make a mistake like this, take the day. For example, next week, you can really implement this protocol. So set yourself a reminder for next Wednesday, because we have FOMC on March 19th, and set yourself a reminder for that session, and on Tuesday to watch out for London session, seek and destroy profiles on the asset class you trade during London session. Like, really try to focus in and prevent this habit, this error from happening again. Because most of the times, and I have to include myself as well, most of the times we do a mistake, then we journal it, but then it flies out of our head. And next week we have the same scenario, the same protocol, and we ignore it again because we didn't learn from our mistakes, because we ignored it. We didn't embody it in our DNA, if you want to say so, in our personality. And you have to set up the environment for success. So put yourself a reminder, and that's what I'm going to do. I'm going to set myself a reminder for Tuesday, March 18th and Wednesday, March 19th to look out specifically for seek and destroy profiles during London session. And with that said, ladies and gentlemen, I wish you all a pleasant evening. Stay safe, trade safe. I hope you enjoyed the video. If yes, leave a thumbs up, subscribe to don't miss out on any future videos, and join the Discord channel, which is linked in the description below, to get exclusive insights. With that said, again, stay safe, trade safe. Bye bye.